The bulls are trying to turn this corner and head to higher prices, but will the bears allow them to? First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was up 0.16%, and we can see SPY is trying to hold its ground right here at 398, which was the support from yesterday's low that the bulls needed to maintain to prevent the bears from pushing price back down towards a 200 daily moving average at 393. So as you can tell, this was not a very impressive bounce off of the low, but this is a lot of momentum to the downside after yesterday's very bearish candle, and the bulls are trying to turn this corner at 398 and break the resistance at 400. So following price action, there is no reason to get overly bullish while we're below 400, but above 400 will instantly be a lot more bullish for a retest of that resistance and gap fill up there at SPY 408. So above 400, we're getting a lot more bullish, and below 400, there is still the chance we get a rejection back down towards support at 393 if we break down below the support at 398. So watch price action very closely, getting more bullish above 400 and more bearish below 398. And you know the leg lower will bring us down to 393, and the leg higher above 400 should bring us up to the gap fill at 408. On the NASDAQ 100 triple Qs, we were up 0.5% today, and the triple Qs were very close to closing the gap to the downside, which is right there at 294.43, but we had buyers stepping in before the gap filled. Now, you know this just as well as I do that gaps typically do get filled, so we should not be surprised in the slightest if we do go down there and fill that gap and test that support zone around 294. The last support we bounced from was 290, so if we do bounce off of the higher low support at 294 and break the high at 300, that is still a higher low, higher high formation. So in the triple Qs, the bulls need to break out above 300 from a higher low scenario and then break the resistance trend line right around 302, and then we should be off to the races to the higher prices around 311 to 313. If the bears win this battle below the negatively sloping 20 daily moving average and resistance zone between 298 and 300, we should see a failure of the support at 294, come back down towards the 200 daily moving average at 290, and then below that we should fill the gap around 288. Now, do not rule the bulls out anytime the triple Qs are above 294, so consider that very critical support. And if we do break the support at 294, you should get a lot more risk off because there is the chance this turns into high volume selling, and you never want to get caught on the wrong side of the trade. If we are indeed going to get high volume selling, you need to be prepared for it. On the Dow Jones, we were down 1.2% today, so we went absolutely nowhere, and the Dow Jones is holding this critical support at 327, and the rising 200 daily moving average is just below at 324. So in the Dow Jones, you're risk on above the support zone, but instantly risk off below it, because if we break down below 324, we're very likely going down to fill that gap at 311. If we bounce from 327, we have resistance at 335 and 336. So we'll need to clear through all of that resistance to get back into the 340s. On the Russell 2000 IWM ETF, we were up 0.5% today, so we went absolutely nowhere, and we got the second day in a row closing below the now resistance at 188 and the 50 EMA of resistance at 187. We bounced from the support zone around 185, so we're going to be in this range between 185 and 188 until we get a breakout. Above 188, we run back up to 192, and above 192, we're off to the races to the low 200s. If we break down below support at 185, we're very likely coming down towards this gap fill at 181 and the rising 200 daily moving average. On the ARKK ETF, we were down 0.13% today, so we went absolutely nowhere, and we did hold that support zone right here at 38, but we are still trading below 39, which is the resistance that could send us to lower prices. Following price action, we have a lower high, lower low below 39, which means we could be coming down towards 37 and then 35 if we break down below support at 38. We're instantly getting a lot more bullish if we could break out above 41, because that will be a higher low, higher high off of the support at 38, and that could send us back into the mid 40s. On the VIX, we were down 2.5% today, and the VIX is getting crushed every time it tries to break out. And today we did test resistance at VIX levels of 20 and instantly got crushed down back below all of the moving averages. So you can see 2023 has been spending a lot of time below 20 in the VIX, and there is no way this is the same behavior we were witnessing in the VIX in last year's bear market. So the VIX below 20 is telling us that fear is leaving the market, and we're seeing a lot more evidence that the VIX does not want to continue to spike above 20. With that being said, anytime the VIX is above 20, you instantly need to be a lot more cautious because the market will be a lot more volatile. On Bitcoin, we're currently down about 1.9%, and Bitcoin is breaking down below this bear flag look at the 50 EMA and now resistance at 22,400. From here, we could come down towards support at 21,300 and then the 200 daily moving average around 20,000. We're not getting bullish until we break this downtrend of lower highs and lower lows, which is going to require a break back over 23,650 and then 25,000. On Google stock, we were up 0.42% today, and Google hit that resistance yet again at 95.6, and yet again we found out there are still a lot of sellers at that level, and we're back down below the 50 EMA. We filled the gap at 93.7, but we still have a gap open at 92.28, so there is the possibility we could go lower before we go any higher. But overall, I think there is a good chance Google stock is trying to rally back up towards 101 to 102, and your risk level is still going to be this low down here right around 89. On Amazon stock, we were up 0.4% today, and intraday we did fill the gap down there at 92.2, and we did get a hammer candle bounce off of the gap fill, and we closed back over support at 93.8. We still have strong resistance between 96 and 98 and then 102, so there's a lot of work for the bulls to break some very critical resistance before we could reach our upper price targets at 109 and 115. If we break down below the support at 93, we could come back down towards the gap fill at 90. And if we break down below that gap fill, we could come down to the gap at 86 or retest the low at 82. So you're instantly getting a lot more risk off while we're trading below 93. On Microsoft stock, we were down 0.18% today, and Microsoft did test critical support at 252 and did find buyers at that level, but we still have this rejection look from the resistance trend line at 257. We're getting bullish above 257 for the gap fill at 262, and we're getting bearish if we break down below 252 because we could come back down to 246 and then 242. On Nvidia stock, we were up 3.83% today, and Nvidia is now in short squeeze territory because we did get a daily close to a higher high after a higher low, which is obviously a bull trend, and we're very close to the next price target at 244, and then above that we short squeeze all the way to the gap fill at 258, and that is likely where we're going to find very strong resistance. You could stay bullish as long as we're above the support down here right around 230 to 233, and we're getting a lot more bearish if we break down below 227 for the gap fill at 211. On Tesla stock, we were down 3.04% today, and as you can see, these Bollinger Bands are now expanding, and Tesla is instantly starting to sell off after that lower high bounce to the next lower low, and we're right on top of critical support right here, right around 183. So 183 is going to be very critical support because if we continue lower, we're going to ride the lower Bollinger Band all the way down to 173 and then 167, and below that, it's a free fall back down to the gap fill at 146. So if you're a Tesla bull and you're staying bullish after we broke down below the support trend line, you are playing with fire. You need to wait for a higher high breakout and a reversal of this short-term downtrend. There's no telling how long this sell-off is going to last or where we're going to find support, but you should be watching support right here, right around 183, because that is the highest likelihood that we could get a bounce before we go much lower. We can get a lot more bullish above 197 to about 200, because then we'll break that daily high, and that could send us back up towards 208 to 215, all the way up to about 230. On Apple stock, we were up 0.84% today, and Apple did not yet close the gap at 151.1, and we are starting to get a bounce off of yesterday's low, but we are still bearish while we're below 156 because there is still a good chance we are coming down towards the support at 151 gap fill and 150. If we break down below 150, we do have this gap fill around 146, and we're getting a lot more bullish if we break resistance at 156 because this will look like a giant inverse head and shoulders pattern, which could take us to much higher prices. On the financials sector, we were down 0.37% today, and the financials did break yesterday's low, and it's looking more and more likely that we are going to get this pattern that I drew out a couple of days ago, which could take us back down to the rising 200 daily moving average before we find support and start trending higher. The industrials were up 0.23% today, getting that close back over the 20 daily moving average, but we are still looking like we could be trending down towards the gap fill at 100.5. The healthcare sector was down 0.54% today, breaking down to a new closing low after the rejection near resistance, and this is still very obviously a strong downtrend, so be cautious to the downside while we're trading below 130. The energy sector was down 1.03% today, continuing into the bear trend after the rejection from resistance at 87, which could take us back down to 82.6 and then 80.5. So jumping back over to the S&P 500, this is still a very clear trading range in SPY, so make sure you have a trading plan that is prepared for any scenario. We're getting more bullish above 400 and more bearish if we break down below 398, so that is a very tight range of only $2 that you need to pay attention to, and then trade the breakout in either direction. Remember, if you're following price action, you shouldn't care less where the market goes, you just need to be prepared for any scenario and then take the trade the price gives you. If you want to become a better price action trader, consider joining the Stocks Channel Trading Discord community. community where you get access to all of my intraday updates and analysis, and you can trade with the Stocks Channel Trading Discord community. You can find out how to join the Discord server by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.